author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters out there. Welcome. I'm Steve Rhodes, host of The Trader's Edge, and thanks so much for joining us. It is terrific Thursday. You know, we've got terrific Tuesdays, terrific Thursdays. Maybe it's a thunderous Thursday, if you will. Hope you're off to a start of a great morning, a great day. Wherever you're at, you absolutely should be. I know I am, folks. And, you can watch us on TigerTV. Just go to the homepage at tfnn.com. You will see us live. Eventually you'll see my favorite spot appear over my left-hand shoulder. It is where I like to be able to go to just visualize a sense of strength. And you should, too, as you're making decisions. If you're trading these markets, you are making decisions all the time. And, folks, you're making decisions always. One of the beautiful things, folks, is that think about it like this. There is never going to be another you. Never. There's never going to be another you. And the question is, and here's the cool thing, okay? It's really with no effort on your part. So you've got all this magic, if you will, and you are a very special person. The real question is, what are you going to do? What decision are you going to make to take advantage of that gift? Thanks so much for joining us. I absolutely love being here with you. Make sure that you make today a great day. Make sure you visualize it. Make sure you start from a period of strength because, folks, we are not creatures of our circumstances. We are creators of our circumstances, and these markets are always giving us the opportunity to create. If we go take a look at the futures markets out there right now, you've got the Dow futures up about 58 points, the S&P's up 8.5, everything off of their session highs at the moment. We'll come back, we'll take a look at those charts. You got the NASDAQ futures up 15, small caps, Russell 2000 up about 6+ points. King dollar on the move to the downside, down 45 ticks right now, trading out at 79.31. We're going to take a look at that. Gold trading out at $16.95, up $11. Silver up 14 cents out at $33.73. If we take a tour around the world, very difficult for today to be a down day, if you will. You go over to the DAX. The DAX is up at 113 points right now, trading out at 67.84. In the UK, over in London, they're up 66 points, up at 58.57. Over in Asia last night, they were having a little bit of a party. You had the Nikkei up strong, 192 points, all because of the weakness in the Japanese yen. Think about it like this. When we have weakness in our dollar, you've got our markets that simply buoy themselves. They just simply reprice themselves in dollars. The same thing over in Japan. Shanghai up 26 points, and the Hang Seng, to round it off, up 272. Our call number is 877-927-6648. And a great lineup today, folks, because after this show, you've got Tom and I doing the Money Masters. Then we've got Kate Stalter from 11 to 12, Larry Pesavento. And where in the world is Larry? I don't know if he's still in Philadelphia. I think that he is. And then he's going to be making his way over to Asia, probably over the weekend or sometime soon. So we'll get the Asia report, if you will. And then you got Ken Shreve, 3 to 4. Warming up the Tom O'Brien Show from 4 to 6. So let's go take a look at the ES Mini. Let's look at that 30-minute chart like we do almost each and every morning. And one of the things that you're going to notice, we talk about expansions, about wanting to really understand the expansions between swing points, because that's really where you get to see fear and greed measure. Now, you may not be an intraday trader, which is fine. Most importantly, though, whether you're trading daily, weekly, monthly, whatever chart it is, however you're investing is, you want to be aware of these sacred geometry numbers. One of those, from an expansion standpoint, 1.272. Another, 1.618. We'll take a look at the ES Mini that we have out here. And if you just simply come into the highs at 4 p.m., on March the 7th. What's today? Say March the 8th already? As a matter of fact, it is. In fact, not only is it March the 8th, folks, not only is it Thursday, but it's full moon Thursday. You had that full moon coming in at 5, I think it was about 5:15, 5:14, but there's that Who song, 5:15. So we'll go with 5:15, if you will. Big full moon. Hopefully you had a chance to see it. Actually, beautiful clear skies here in Florida. I don't know if it's across the entire state, but you're certainly going to get beautiful full moon pictures coming up over that ocean or over the bay. I mean, how beautiful is that? Now, Let's go back to our 1.618. No reason to stray away from this. If you take a look at the high at 4 p.m., yesterday, if you will, and you take a look at the expansion from the low that was put in on the ES Mini down around 10 p.m. last night, the low there being 1344. If you took that difference, 1344, and you subtracted that from the high, which was 1354. So you got 10 points. You multiply that 10 points times 1.618, you'd get 16, what is that, 16.8. You add that to the bottom here, which is that 1344 level. And where you would get up to is right, in fact, where at 7:30 this morning you had the ES Mini cresting. It did a 1.618 expansion. And when you do that, folks, that's usually a time for it to rest. That's where the old greed might set in, and people will go ahead and take some money off of the table. Maybe it's really fear that's setting in up there if you were long on this contract. What else do you have going on up there? Well, what you also have going up there is you've got a 786 retracement off of a swing point. You've got a 0.618 retracement off of a swing point. How about our A to B equals C to D? Where does that finish at? Well, we just simply are going to come down into the low at about 3 p.m. on March the 6th, a couple days ago, and we'll go all the way up to that swing point that was made up there at 4 p.m. yesterday. And what you will see is a 1-to-1 A to B equals C to D, finishing out right here just above the high. So that looks like that was right at about 1360 and 50 cents. And where did we actually get up to? You got up to 1360. Folks, we're not going to cry over half of a tick, are we? I mean, how does that work? So you got an A to B equals C to D. What do you have to be careful of? Well, what you have to be careful of is, and I'm going to go ahead and just remove some of this clutter from the chart here so you can take a look at it. So if you were looking at this, now we're posing that question, and I'm assuming that you have been looking, at my charts, if you will. And, yeah, okay, well, I'll still go back there and take a look at that. And so, in any event here, what we are looking at, that's true, I am looking at the rollover. Let's go ahead and finish this out here on the continuous contract and take a look at this A to B equals C to D, if you will, folks, and still finishing out at the 1350 area. And what do you have to be concerned about? You have to be concerned about the fact that price is on the left-hand side. But let's go over and take a look at the 30-minute chart on the June contract here. Just got somebody in the den sent me a message, and so let's do that here. Let's pull up that contract. That's going to be the ES. Is it? I think it's M2 here. Let's pull that up. There we go. And let's pull up the 30-minute chart on that. Let's see how that pattern is out there. I'm going to change this down to a 30-minute chart, and let's take a look at 30 minutes. And what do we have out here? We also have an A to B equals C to D. In fact, it's going to be a slightly different one. Let's put the expansions between swing points on, if we will. And what you have here is you still have this 0.786, 0.618, in essence, just over 0.618 retracement coming off of the high on March the 1st. The high out there being in that 1368 time frame. If we just simply, let me get rid of this here right now. Let's go draw the Gartley pattern out there, and we'll draw the Gartley pattern coming off of the highs out here, all the way down to the low, back up to the high that was made, and not as pretty as the pattern that we had out there. So I'm going to wipe that off of the screen here, and so now let's go move over. Let's go move over to the daily chart. So let's take a look at the daily chart on the futures contract. Give me a second here to pull that up. Okay, so let's take a look at the daily contract. This is the continuous contract, and what you will see on the continuous contract here, folks, is, we had this ascending wedge pattern that was going on, and clearly we had a break of it 2 trading sessions ago. You actually broke, and these patterns, folks, as you know, they resolve themselves typically to the downside. You certainly did that on the 5th, but you really did that with conviction on the 6th. And now what's going on is you had the ES Mini trading up into the swing point of May the 2nd. The low on that swing point being the 1354.75. You're trading out right now at 1354.50. If the ES Mini can bust through this area, what it will do is it will likely come back and it will test the top of that swing point, 1373.50. I mean, that is a potential. But if you really just take a look at where is it likely to stop dead in its tracks, let's go take a look at those retracement numbers. Let's go take a look at the 618 retracement numbers. Give me a second here to find that. There we go. Here's the tool. And if we just simply come from the highs that were put out there on February 29th, we know that was the high, 1377.24. Well, that didn't work. 1377.24. Let's try that again from the high out there down to the low that was put in yesterday. What you'll see right now is you're trading up at that 0.618 level. That's where you're going to come join us if you are in Clearwater. You can see that was at 1361. You are trading off that session low. If the ES Mini decides to bust through that area, the next area is that 0.786, right around that 1368 time frame. And what's it all about, folks? It is all about King Dollar and Queen Euro. Now, if you were listening to the Money Masters show yesterday at 10:30, when Tom and I were doing the show, one of the things that I showed you was the euro. And what I was showing you, folks, was this pattern that was out here on the 30-minute chart. And I was showing you those two Fibonacci expansion numbers that were coming together at a swing point at the same time. So you can see right here where my cursor is at, if you will, you can see, and if you look in the upper left-hand side, you might be able to see over here that that was actually at 10:30. And one of the things that I noticed was that you had a 1.618 and a 1.272 expansion of swing points. When you have that, folks, and actually, if you were to have gone to the daily chart, I don't think I'd fight. Well, okay, I'm going to pull it back here. What you will also see that was going on at the same time, I didn't notice this while we were on the air, but I certainly did as we got off. And if you come down to the swing point on the euro that was made out at 9 o'clock on February 16th, what you're going to see, can you see this 0.786? So you had a 0.786 contraction coming together with 1.618 and 1.272. That area absolutely held. Our markets moved higher. In fact, yesterday, Dow closed up 78 points. Right now in the futures, you're up 51. That's why I want you to understand this beautiful, beautiful sacred geometry, folks. 877-927-6648. We'll be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Futures still up. You got the Dow up 50. Like I say, it's going to be tough, for the market to pull back. But, boy, if it does today, that'll be sending out some heck of a signal. Just simply, you've got Europe still up about 113 over in the DAX. That's what we've got up on our screen here. You can see you've also got a gap up. Now, when you take a look at the DAX, big down day on March the 6th. The high out there was 68.40. And where did it get up to in this morning's trading? It got up only to a high of 68.24. But you do have to respect this gap that is out there. We know that that's an open window, if you will. We do know that those windows will get filled. But you can see the DAX really still just trading inside this little rectangular sideways trading range. Has been ever since February 3rd. The key here, and I mentioned it yesterday, and when you want to be able to take a look at the DAX, because, the DAX is actually, you want to take a look at weakness and strength. And the DAX has been the weak link out there, and you want to be looking for, you always want to be looking for clues, right? I mean, that's what we're doing. We're taking a look at charts here, and one of those clues that you want to be able to key in on is February the 3rd. February 3rd was when our market actually really took off, all markets around the world, if you will. And you can see the bottom of that swing point on February 3rd. When you take a look at the DAX, 66.35. You can see how it came down into that area on March the 6th, 2 trading sessions ago, stopped out at 66.33. So within a couple of points, didn't bust through that area, if you will. And what did it do? Yesterday's trading session, it rejected that area, stayed inside that. Where else can you find clues like this, folks, in any of the other charts that you've got out there? Well, let's go take a look at light sweet crude. And some of you might be trading the ETFs. Maybe you're trading the contract. But what I do want to do is I want to be able to point out to you, again, the importance of either a gap up and a date. Now, in this case here, we're not looking at February 3rd. What we're looking at is the February 21st time frame. And you've got light sweet crude. Now, we had President's Day on that Monday, so you had the rest of the world was basically open, and you could have expected potentially a gap the way that these markets trade, but you still have to respect the gap. Doesn't matter why. Why it occurred, just simply that it's out there and it's on the chart. You want to be paying attention to that area. So if we blow up light sweet crude, what you can see, the low on that gap up is the 104.61. That's from February 21st. What does light sweet crude do on March the 6th? That's when our markets were down, a couple hundred points or so. And you take a look at light sweet crude, got down to 104.51. So got down just below that and still closed above. Closed out at 105 even. What does it do yesterday? Yesterday it comes down and tests that area again, gets just slightly lower, gets out to the 104.35 time frame. And right at that same time, we were taking a look at the euro when it was making a 1.272, a 1.618 expansion, and a 0.786 retracement. What did oil do? Oil took off from there as well. So you want to be able to take a look at these types of, you're looking for these types of clues, if you will. So where else do we have those clues out there? Let's go take a look at our ETF structures out here. Let's go take a look at the diamonds or the SPYs or the small caps. So let's take a look at the diamonds first, since that's what I said. And, you know, nothing like a diamond in the rough, if you will. And if you take a look at the diamonds, what you'll see is this red line that we've got coming across here. And what date is that? Absolutely, it's February 3rd. Where the red line is at, the top of that line is February 2nd. The high there, 127.16. When the market came down, yesterday, excuse me, I got something in my throat here. So a quick swig of water. Thank you. So if we take a look at 2 trading sessions ago, as the market was moving down, where do the diamonds get down to? They get down to a low of 127.18. What was the high of that February 2nd area? 127.16. 2 pennies. Still 2 pennies away. And what do you do yesterday? Yesterday, you don't even get all the way down there. Now, when you came down with some volume. Take a look at that volume. You had some real distribution going on, if you will. If you take a look at distribution from an IBD perspective, a little bit different than the distribution phase that Tom teaches us in the art of timing the trade. But you take a look at this as a distribution day, you coming down with 14 million shares. That was not only going into the gap up that we had on February 3rd, which had 8.6 million shares. It was coming into that February 2nd area with 4.5. Still stopped dead in its tracks. Why? Why do you want to understand and respect gaps? Because they have important meaning behind them. That area here has held, and not until that area breaks, folks, you know, is there going to be any sign of any kind of deeper correction. But the signs are out there when you start taking a look at the volume bars that are out here and which ones are down days, which ones are up days, you know, so you want to respect that. But that is on the diamonds, that area held, and those are the types of things that you want to look for. You can see the same type of thing if you go over to the SPYs. Take a look at the SPYs. SPYs actually a little bit stronger than the diamonds. Here's that same time period, February 2nd. SPYs couldn't even get down there, folks. We'll be right back. We'll see how these markets are going to pop and whether they're going to drop. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You've got the Dow leading the charge, up 75 points right now. S&P's actually the strength in the market, up almost 0.75%, up 9.81. You got the composite just slightly behind it at 19.63, trading out at 29.55. The small caps up $5.50 there. They're up 0.71. And actually, so you got the Dow percentage-wise, in the back of the pack. If you take a look around their active list, you've got Apple up $4, trading out at $5.34 right now. That's up less than about 0.75%. Cisco trading up 18 ticks out at $19.59. Google up $3. Intel up 2 pennies. Microsoft up 15 cents. Take a look at dollar-wise on the way up. You've got Medivation, ticker symbol MDVN. That's trading up $8.69 right now. That's up 13%. CF Industries, I believe they were up yesterday as well. They're trading out at 181. That's up $5. As I said, Apple up $4 so far. Baidu, they're up about 2% this morning, up 2.5. Coach, High Flyer, COH is the ticker symbol on that. They're up a couple of bucks. What else do you have? Anheuser-Busch, Bud. That's Bud's for you, folks. They're up 3%, up $1.87. Goldman Sachs up about $1.82. On the downside, what do you have? Who's the downer in the market today? You've got Green Mountain Coffee. They're down about 6%. Let's see if there's any news on Green Mountain Coffee. That ticker symbol, folks, GMCR. Nothing that pops up on my screen that's pulling them down. You got Mickey D. You've got McDonald's. They're down 3%. They're down $3.07. Says that McDonald's February comparable sales up 7.5%. That must have not met expectations. Not too bad, though. Comparable to be up 7.5%. But that must not be meeting their forecasts, their expectations. You've got McDonald's trading down $3 right now. Dendrion, they are trading down $1.50. That's down 13%. Navistar, NAV, they're off $1.60. Williams and Sonoma, I believe they did release numbers this morning. I thought their numbers were pretty good. They're trading off about $1.30. Let's see, where are the numbers? They don't pop up on my screen. So let's go take a quick tour around. Now, before we do that, I was talking about the diamonds. Now, the diamonds were able to make it back into the February 2nd area. So the diamonds make it back into the February 2nd area. And what I mentioned was, if you take a look at the SPYs were stronger. Why do you want to understand some of these swing point areas, some of these gap areas? Because when you're making your decisions, whether you're going to go long or you're going to go short or how you're going to be trading intraday, if you were taking a bullish approach to the market, would you be playing the diamonds here right now, or would you be going after something that was showing more strength? I would say, folks, when you go long, make sure you're playing strength, and when you are going short, make sure that you're playing the weakness, if you will. So if you take a look at the SPYs, I'm going to go ahead and pull that up here on my screen for you. And what you're going to see is, in fact, if we just simply go from the, let's just take a look at the retracement. I'm going to go back before February 2nd because the actual swing point is January 30th on the SPYs. We'll go from the low down there, which happens to be 130.06. Let me make sure. Yeah, 130.06 all the way up to the high on the SPYs, which came in February 29th. That was out at 138.19. What you will also see is that where the SPYs traded down to, as the market was moving down with volume on March the 6th, and it moved down there with 201 million shares, it was really just only being able to make a 0.382 retracement. So pretty strong when you only make a 0.382 retracement, because yesterday what it did is it tested that 0.382 area right in that 135-ish range, if you will, and just simply now you've got a gap up here. And so if you were taking a look at going long, would you want to put your money in the diamonds or would you want to put them in the SPYs? You absolutely would want to put them in the SPYs. I'm not suggesting that you go long here. I just want to be able to link the known to the unknown. I want you to be able to know that these markets are always providing you with information and information to provide to trade on. Likewise, if you were looking to go short the market, would you be looking at the SPYs to go short? Or would you look at the diamonds? The diamonds are weaker than the SPYs when you take a look at the ETFs. And that's really the point that I want to be able to make to you is to help you make that decision. When you are making decisions, if you do play the ETFs, both on the long side and the short side, you want to be able to make correlations, if you will, like the ones that we're taking a look at. So now let's talk about weakness out there, because we know the big dog, we know the strength is in the Qs. We won't go there for the moment, but let's go take a look at the small caps. So on the small caps, folks, the IWM. Here, this red line going across is that February 2nd area. You can see that we're trading below the low of that area. There's no other ETF index out there where that is occurring. So if you're going to be looking for a short position, if that is your inclination, then this is the area that you want to participate in because it has got weakness. Then you can take a look at volume movement. Volume has been increasing on the way down, if you will. And certainly if we take a look at where this thing has retraced to, and I'll just simply come back into that December 14th area, that is really where we made the last, in this case here, as you're taking a look at the chart, the last significant turn in the IWM, go all the way up to the high that was put in on February the 17th. Now what you can see is where this moved back down to is that 0.382 area. And we know that when you're taking a look at retracements, you're going to get to that 0.382 area. You're going to pause. That's, in fact, what occurred yesterday. You made just a slight counter trend bounce. You almost traded sideways, if you will. Yes, it was up. But if you take a look at inside the candle here, and you traded up on 57 million shares, when you came down with 80 million shares. Let's go over to Mike in Lakeland. Mike, thanks for calling. Thanks for holding. How are you today?
Yeah, very good, Steve. Thank you. You work very, very hard. We really enjoy what you do for us.
Oh, thank you. I appreciate that.
I wanted to ask you about bonds, but I got just 2 or 3 quick questions, and you're a very straight shooter. Is that if the Federal Reserve was not in the bond market buying treasury or doing what they do with treasuries, whether it be QE 1, 2, 3, twist, sterilize, not sterilize, whatever.
Yeah.
What would interest rates, would they be going up or would they be going down?
It would be a supply demand thing. And I would assume. Well, what do you think?
Well, this is where and maybe I reflect, and I really want your honest, feedback, because I probably reflect a lot of other people. My thought is that if the Federal Reserve was not buying bonds, rates would be higher.
Yeah.
The dollar would be stronger, and the market most likely would be down.
Yeah.
And if that was the case, what would be the chances of Obama getting reelected? So I love technical analysis. I'm saying on a very short-term time frame, though, because I feel as though we got these what I call not-for-profit players, the central bankers.
Yeah.
And they have motivations that are beyond greed and fear. They have policy motivations. And I know, and I agree with Tom that you can't hold the market up. You can't. But boy, I mean, these guys have been manipulating the heck. I mean, you saw the interview with the fellow from the Grant Observer.
Right.
And he said, to Maria Bartiromo, he said the other day, he said, just yesterday, he said, if somebody from D.C. was manipulating what a pound is. If somebody went to the grocery store and asked for a pound of roast beef and all they got was, 75% of it, or if they got a gallon of gas and they got 75%, they'd be screaming and yelling. But, this guy, he's manipulating currency day in and day out, our lives, the market, our retirement, everything. And I'm like, God,
So let's say you can, so that's one approach. That's one way to take a look at it. Another, so the basic premise would be that if the Fed wasn't in there buying bonds, that the market would be more free to move to whatever the real levels would be. Yes?
Yeah, I would think that we would have freer markets. I think that the longer-term technicals reflecting fear and greed would be more relevant. And that's why here, as a technical trader myself, that I feel as though I'm forced to stay very, very small, very, very short term.
Yes.
And just I hate doing it, but and I think it's reflected in all the correlations that we see, all the world markets, And I would love to hear somebody on the technical side say, hey guys, we got a new paradigm here. We got people playing that aren't motivated by fear or greed, and we gotta.
Oh no, I think everybody's motivated by fear and greed. That's a universal. That's a universal thing. That is absolutely there's no question. There's no fact because you take action. The more fear you've got out there, typically the more massive action that you might take. But if you just
Ben's buying treasuries at 2%. He owns 91% of U.S. treasuries.
Yeah.
He's not motivated by profit.
Well, that's not true. The Fed has been making all kinds of profit out there. But just to go back to your initial question, if you will, yes, I think things are driven by supply and demand. If you have interest rates that are going up, then what kind of demand are you going to have to try to work through the housing aspect that's out there? And you still have, even if you say that the U.S. Treasuries weren't being purchased, you still have all of the fear and greed, really, let's just say all of the fear out there across the rest of the universe, across the rest of the countries. And then the question becomes, where is it that you're going to go ahead and park your money? Where is it that you're going to feel safe? Where does an IBM, where does an Apple, where does a Google, where does a Microsoft go to park their funds?
I agree, but I just think that everything is distorted with what's going on with treasuries because of the play of the Bernanke.
Yeah, but so I don't know if
he's here every day.
It could be, but then I really do step back and I say, look, what I'm really in is the money business. That's what to me. This is not trading. This is not investing. This is just nothing more than being in the money business and understanding probabilities. Just simply understanding math. To me, it's being able to visualize patterns because the patterns that are out there help you to identify where the fear and greed points out. And so, in essence, the game isn't really stacked against us to be able to trade. When I take a look at the 30-year Treasury bond, which is what I've got up on my screen here right now, and I just simply apply the tool that I've got in this software package that measures fear and greed, which are, in my opinion, are nothing more than the summation index, the Fibonacci summation index, where you take a look at normal contractions and expansions, and they are in existence all over the place. Take a look at, you see a 0.786 retracement coming off of a high on January 31st in the 30-year bond, and that retracement was made all the way back on February 28th. When you get to a 0.786 retracement, if you're long, and you were long bonds at that stage, you would have to pause. Because when you get up to that level that there's a likely chance that you're going to see some type of reversal. Same thing when you get to the 0.618, and if you just simply on the bonds come back to the February 15th time frame. So to me, whether there's something going on, by the large bankers or whoever it is, the Trilateral Commission, whatever it is that you want to throw out there.
I don't think it's that radical here. I'm not.
No.
This isn't black helicopter stuff. I mean, we got Jim Grant from the Grant Observer, interviewing Maria Bartiromo, and he's like, look, this is what's going on. I mean, they're currency manipulators, and we know how important the dollar is to all the markets. So I just think that, when we talk greed and fear day in and day out with technicals, we have to understand that we got players that are not motivated by that.
Yeah, but the markets still, though, they're working, at least from the ability to be able to
naturally.
What's that?
I say, I'll be honest, I don't think that, and I think that's why people have backed away. I don't think they are working naturally at all. I mean, I'm not saying I catch fish. I mean, I'm a technical trader, but I mean, I know enough. I'm fishing in a trout pond. I mean, I'm not in some wild stream in Wyoming. This is a trout pond.
Yeah. So to me, to me, working naturally is being able to just truly take a look at. I'm a big believer in the summation series of understanding the retracements and expansions, and we can go back and we can take a look at a Dow chart. So do you think that the manipulation has been going on since the beginning of time, or are we just taking, or is it different levels of different?
No, I think it is. I think it has expanded exponentially over the last 3 to 4 years.
Okay.
And my issue is that, I mean, I can look at, and I love technical. I do.
Sure.
And I really would love to trade weekly and daily and everything. But what I don't know is on March 12th to 13th, when Ben gets together again, he seems like he's out every day. I mean, yesterday he's out telling the market what he's thinking,
yes,
to have a launch.
Yes.
I mean, he could come out and, whether it be QE 1, 2, 3, a twist, we know from the charts he moved all the markets on March 9th. I mean, he turned them up. He turned them up back, and, we can see where those moves, came from and why. And I just... like I say, I can get in on a short-term basis and trade and catch some nice fish, and I know I'm trout fishing, but
yeah,
I feel like it's a trout pond. I don't feel like it's a free wild market, and that's.
I just think
frustrating.
My own personal opinion is that when it's great. It's great to have conversation like this. I'd rather have it over a beer, in essence, when I'm not really trading, because if I, from my standpoint, if I let those outside forces of manipulation, what I don't like is when the media or what have you is really talking about fear and keeping people out of the markets, because these things, there are non-random patterns that occur on a continuous basis that allow you to be able to trade. And when you start putting some of these, and I see them on a continuous basis. Even with that doesn't mean every trade works. But when you're playing the money game or the money business or what have you, they don't always have to work. You're just looking for probabilities that are going to stack up on your side. But we're going to break, Mike. Hey, thanks for calling.
I appreciate it.
No, thanks for calling. Thanks for sharing.
Thank you.
You bet. Folks, 877-927-6648. You got the Dow up 53 points right now. S&P's up 8. We'll be right back.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Dow's up about 55 points. You know what I love? And Mike, thanks for calling, and sharing. It's good conversation. But so here's what I want to be able to do. What I've got up on my screen, and hopefully you're watching us on TigerTV, folks. This is the daily chart of the New York Stock Exchange. And what I've done here is a couple of things. Number one, one of the reasons why I'm putting on a Master Trader Series course, and I'm coming out to Denver March 23rd and 24th, Tampa the 13th and 14th of April, in Boston the 27th and 28th. And, when I started out today's show, I said something to the effect of, we're not creatures of circumstance, folks. We are creators of circumstance. And if you take the approach that all these other outside forces, make us creatures of circumstance, to me, that is the absolute wrong mindset in order to be able to really get your head wrapped around these markets. So it doesn't matter to me whether there is or there isn't. You can manipulate a stock if you want to. If you've got enough money, you can do anything. But it still doesn't change your ability to be able to use patterns to make all kinds of money. And in the end, isn't that really what, if you are playing the money business or the money game, isn't that really what it's all about? So when we take a look at these patterns that are out here, and this is why I'm so emphatic about wanting to be able to spend time with just a few traders, just for a couple of days, and that's what we're going to be doing in that Master Trader Series course. And I'm so convinced that I can help people to create their wealth creation machines, and it's just about getting your mindset. That's why I'm even giving a unconditional money-back guarantee on that, too. So, because you're going to make a large investment, I want to make sure at the end that you're like, man, this was way worth more than the money that you've invested in yourself. So if you come back here to the New York Stock Exchange, and I'm just simply going to show you patterns. We can go back as far as you want, and we'll show you when there were patterns that were out there that you could have traded. We talk about these 1.272, 1.618 expansions between swing points. So just take a look at the first one that I've got that goes all the way back to August 16, 2007. That was the low that's right here. That is my X point as the market moved up into its highs coming into October of 2007. Again, this is the New York Stock Exchange, so the number there is going to be the 10387. It makes an A to B equals CD. It makes more than a 1-to-1, but what it does do is it makes a 1.272 expansion all the way down into the time frame of January 23rd. And then what does the market do? The market bounces up. What does it also do? The next pattern that it creates is a Gartley sell pattern, and that's the yellow area. So you're looking at a blue area that is a butterfly expansion that gave you the opportunity to be able to go long these markets, and you then had a sell pattern. Now, what you also see out here is you'll see a red and green line, and Mike used the word exponential. And exponential, in my opinion, is absolutely where your head needs to be wrapped around, because this world is moving much, much faster. You know, when you start taking a look at how many people are actually on the internet today across the world, it's like 20% or something like that. I was trying to find the statistic on that. Only 20%. And that's from, you know, whenever Al Gore created the internet to where we're at today. But you take a look at the next probably 7 years, right? We're 2012, if you will, the next 7 to 10 years. And I'll bet you that 20%, and you take a look at how long it's taken us to get from an internet standpoint, from where we began to where we're at, and then you take a look at this shorter time frame, we're going to go from 20% to 60%. Everything is growing exponentially. And when you take a look at that blue line and the red line on my chart, what you're going to see is that is the exponential moving average. That is when the blue line, the 200-day exponential moving average, crosses over the 50-day. That is the red line. And if I only taught you just that one tool, now it's a lagging indicator that's out there, but I'd rather, with you folks that have money that are not managing it, meaning that you don't have the self-management system because it's sitting in an account from your work, what have you, and you're just checking a box. If you could just simply understand just this tool, that be short when that blue line crosses the red line, that 200 crosses over the 50-day. But these patterns, they are out here each and every day, and I want to be able to teach you how to create your wealth creation machine, folks. So 877, well, Tom and I will be up in about, 7-8 minutes. Have a great morning. See you tomorrow, folks.